Welcome to this guide on Revolut trading fees, where we will break down the costs associated with buying and selling investments through the Revolut platform. First, it is essential to understand that Revolut offers a range of financial services, including trading in stocks, commodities, and cryptocurrencies. When trading on Revolut, there are several fees to be aware of, including the trading commission, spread, and other charges. To get started, you need to understand the trading commission, which is a fee charged by Revolut for executing a trade. The commission varies depending on the type of investment and the user's subscription plan. For example, Revolut's standard plan charges a commission of 0.1% for stock trades, while the premium and metal plans offer lower or even zero commission on trades. Next, we have the spread, which is the difference between the buy and sell price of an investment. The spread is not a fee per se, but it can still affect the overall cost of your trade. Revolut's spread is generally competitive, but it can vary depending on market conditions. Other charges to consider include the overnight funding fee, which applies to positions held overnight, and the inactivity fee, which is charged if your account is inactive for an extended period. To minimize your trading fees on Revolut, consider the following best practices. First, choose the right subscription plan for your needs, as this can significantly impact your trading costs. Second, be mindful of the spread and try to trade during times of high liquidity to minimize its impact. Finally, keep an eye on your account activity to avoid inactivity fees. In conclusion, understanding Revolut trading fees is crucial to making informed investment decisions. By being aware of the trading commission, spread, and other charges, you can minimize your costs and maximize your returns. Always review the fee structure before making a trade and consider your overall investment strategy to get the most out of the Revolut platform.